Welcome to the Deep Dive. Today, we're cutting through the noise in biotech to break down the Q3 2025 corporate update from Vir Biotechnology's ticker VIR.
Yeah, this call was something else. It was held after hours on November 5th, and it was just a perfect example of a company telling two completely different stories at the same time.
That's it, exactly. On one hand, Vir is trying to pivot, right? They're moving away from that old pandemic story and becoming this really focused play on hepatitis delta virus and a new oncology platform.
A very specific news story. And our job today is to really dig into that contradiction, because you have this massive financial shortfall.
It's a huge miss.
And then in the same breath, they were announcing this incredible accelerated clinical execution. How do those two things even exist in the same quarterly report?
And more importantly, which story is the market actually listening to? Because if you look at the stock reaction, it tells a pretty clear tale.
Oh, absolutely. The market heard one thing loud and clear: the red ink. Investors just hammered them on the size of the miss. It shows there's still a ton of skepticism about that long wait for pivotal data.
Okay, so let's start there. Let's start with those, let's just call them ugly numbers, because you really couldn't look away.
You really couldn't. Revenue came in at just $0.24 million.
Wait, say that again. 0.24 million.
Yeah. And the consensus, what everyone was expecting, was closer to 2 million. So, I mean, that's a miss of almost 97%. It's basically zero revenue.
And the EPS, the earnings per share, I assume that wasn't much better.
Nope. A loss of $1.17 per share. The street was braced for a loss, but they were thinking more like 70 cents. So a big miss there, too.
When the numbers are that bad, you can see why any good news on the clinical side just got totally drowned out.
Completely. The market is just screaming, show us a path to making money, and this P&L was not it.
But, okay, let's pause there. Because if you actually look deeper into the financials, the story gets a lot more complicated and, honestly, a little better.
It does. Believe it or not, their net loss actually got smaller compared to last year.
How is that even possible with revenue basically disappearing?
Expense discipline. The net loss was about $163 million, which is an improvement of over $50 million year over year. They're running a much tighter ship.
So they've been cutting costs, SG&A, things like that.
Exactly. Selling, general, and admin expenses dropped a few million. Total operating expenses were down something like $46 million from the same quarter last year. It's all coming from old restructurings and just being more efficient.
Okay, but the R&D spending was still huge, $151 million.
Yes. And that's where we get to this really clever bit of financial engineering that I think a lot of people missed in the initial panic.
Go on.
So inside that $151 million was a pre-planned $75 million milestone payment. It was for the former shareholders of a company they acquired, Immunix.
$75 million is a huge chunk of cash to go out the door. That has to hurt the cash balance.
Well, it would, except this payment was funded entirely from restricted cash. It was money sitting in escrow from the Sanofi deal a while back.
Okay, so it was basically pre-spent money that was never part of their day-to-day operating cash anyway.
Precisely. It was a non-event for their actual runway.
Yeah.
And that brings us to the most important number from the entire call. They ended the quarter with $810 million in cash and investments.
And they reiterated the runway.
They did. Very clearly, they're funded into mid-2027.
And for you, the listener, that is the whole story right there. Mid-2027 is their safety net. It gets them through all their major clinical data readouts without having to go back to the market for more money.
Right. And with that financial security locked in, we can pivot to the clinical story. And that part of the call was overwhelmingly positive.
Starting with hepatitis delta, or HDV, this is their main value driver long-term. And they had a massive operational win here.
A huge win. They finished enrolling their big phase 3 study, ECLIPSE 1, a full 2 months ahead of schedule.
2 months. In clinical development, that's an eternity. That shows they are executing flawlessly.
It does. And because of that speed, they've now pulled everything forward. The top-line data for all 3 of their big HDV studies is now expected in Q1 of 2027.
And one of those, ECLIPSE 3, is a head-to-head trial, right, against the competitor drug, bulevirtide.
Yes, from Gilead. And that's critical. You don't just have to show your drug works. You have to show it's better or at least more convenient than the existing standard of care. That's how you win with doctors and insurers.
Speaking of the competition, management didn't seem too worried. They almost welcomed it.
Yeah, their argument is that another drug on the market just raises awareness, gets more people tested, and grows the pie for everyone. But they also have a real ace up their sleeve.
The dosing schedule.
The dosing. Their regimen is monthly. Bulevirtide is a weekly shot. For a chronic disease, I mean, moving from 52 injections a year to 12, that is a massive, massive quality of life improvement for patients.
It's a huge selling point. And we're going to get a preview of their data pretty soon, right? At the big liver meeting, AASLD.
Yep, this month. They're presenting the full 48-week data from their phase 2 study. The market really needs to see that the great results they showed earlier hold up over the long term. It just helps de-risk that whole Q1 2027 readout.
Okay, so HDV funded, accelerated looks great, but Vir is also making this huge bet on a second pillar, their oncology platform.
The PRO-XTEN technology. It's all about making T-cell engagers safer.
Right, so break that down for us. T-cell engagers are super powerful, but they have a big toxicity problem.
A huge one. They can cause something called cytokine release syndrome, which can be fatal. They just attack healthy tissue along with the cancer. It's their biggest limitation.
So how does this masking technology fix that?
Think of it like a safety cap on a bottle of poison. The drug is delivered in an inactive or masked state. That mask is designed to only be removed by enzymes that are found in high concentrations right around the tumor.
So the drug only gets activated right where you want it to, at the site of the cancer.
That's the idea. It should dramatically reduce systemic toxicity and let you give patients a much higher, more effective dose.
Makes sense. And they have a few of these in the clinic, but all eyes are really on one drug to prove the concept.
All eyes on VIR 5500. It's for late-line prostate cancer, and the big data update is scheduled for Q1 2026.
So that's the next big catalyst, Q1 2026, the first real test of whether this whole masking platform actually works in people.
It's the first proof point, and they were clear about what to expect. We'll see safety data, and we'll be looking for signs of efficacy, like PSA responses. But they also clarified that data from a new combo study they're starting won't be in that update.
So this is all about the monotherapy in the sickest patients first. High risk, but potentially very high reward.
Precisely. And that brings us right back to this fundamental tension in the stock.
You have the long-term funded, de-risked HDV story on one side.
And this near-term, high-risk, platform-validating oncology story on the other. Management is pitching this capital-efficient story with a long runway.
But the market reaction says investors are just fixated on the near-term revenue miss and that long wait until Q1 2027.
It's a classic biotech standoff. And it's funny because the sell-side analysts are completely on board with a long-term view.
Right. The consensus rating is basically a strong buy with a price target around $17 a share. They see huge upside here.
They're looking right through the next 2 years of losses and focusing only on those two key dates. Q1 2026 for the oncology proof of concept, and Q1 2027 for the big one, the HDV data package.
Okay, so with that set up, let's pivot to our final segment. And as always, this is purely for theoretical discussion. We are not financial advisors.
Definitely not. But for someone watching the stock, a stock that's been beaten down but is now resetting after this call, there is a pretty interesting way to play this timing conflict.
The conflict between the 2026 oncology data and the much bigger 2027 HDV data.
The theoretical trade idea here would be to put on a calendar call spread.
Okay, walk us through the mechanics of that. How would that work?
It's a two-part trade. First, you buy a long-dated call option, something like the January 2027 calls.
Yep.
You want that long-term exposure to the truly transformational HDV data.
Okay, so you're buying the big catalyst. What's the second part?
Then you simultaneously sell a shorter-dated call option against it. Specifically, you'd sell the March 2026 calls.
The ones that expire right after that first big oncology data readout.
Exactly. The theory is that the market is going to get really excited and bid up the price, the premium of those March 2026 options heading into the data release.
But you're betting that data, being early and in sick patients, probably won't be a massive home run that sends the stock soaring.
Right. So you sell that inflated premium, you collect that cash, and you use it to help pay for your long-dated 2027 calls.
So you're using the market's focus on the near-term, high-risk event to finance your bet on the longer-term, more certain, and much bigger event.
That's the structure. You reduce your cost, you harvest some volatility, and you keep your exposure to the real prize, which is the HDV data in 2027. All while knowing that mid-2027 cash runway is sitting there as your ultimate safety floor.
A fascinating way to play the timeline. Again, purely theoretical. So to wrap this all up, Vir gave us a quarter of total contrasts. Near zero revenue, but incredible operational focus that actually accelerated their most important program.
The story is now a 2-year clinical sprint. It's all about execution on HDV and the oncology platform.
Which leaves us with the final question for you, the listener. Considering the strong analyst conviction and that really clever financial discipline they showed, is the market being short-sighted here, overly punishing Vir for its current lack of revenue?
Or is Q1 2027 still just too far away to matter right now? That's the multi-million-dollar question.
Thank you for joining us for this deep exploration of the Vir Q3 2025 update. We'll catch you next time.